Hello, my name is Nicholas Bagley, or Nick Bagley. I'm here today to talk on behalf of Finicity and MasterCard about open banking. Today we're going to talk a little bit about connecting siloed data and really the impact of open banking and AI on the financial experience. So I am the Vice President of Data Science here for Finicity. I've been working with Finicity for the past couple of years, and last year MasterCard announced that they were going to acquire Finicity, and we've since integrated with MasterCard and are working towards open banking globally. So to give you a little bit of information, I first want to start with a little bit of background on myself, and then I'll provide some background about Finicity as well and MasterCard. And then that will help kind of lead the way for the conversation and give us an opportunity to think about the silos that do exist within the financial industry and across many other different data sets, industries, and really dimensions as well. And then we'll use that to talk about AI and the opportunities that it's presenting and how it's changing the financial experience and really how we experience economic growth as individuals, as companies, and as a fintech industry as a whole. So to start, again, Nick Bagley, I started in big data and data science really back in 2008, 2009. And at that time, I was working with Mitel and Sun Microsystems, and we were really trying to understand how we could create presence, how we could take video conferencing and be able to make that something that could follow you and be present as you moved around. We wanted to be able to handle security and thin client integrations, as well as many other things that were very, very difficult to do at the time. And without a lot of big data technologies, we really met limitations that were essentially impossible to overcome. And so I discovered Hadoop, and I ended up going out and working in the staffing and in the consulting industry, and started growing up the Hadoop users groups here in Utah. And then eventually worked with the White House to create national and international groups focused on data science, as well as focused on big data and national priorities that were set previously as well. Since that time, I've worked across sectors within academia, for-profit, nonprofit, startups, as well as large organizations as well. And within each of these, I've found that there are core silos that really prevent us from being successful. And sometimes those are data oriented, which we'll focus on today. But sometimes they're about the motivation that a particular group has. We can almost think of this as the currency between each group. When we're talking about federal government, local government, academia, for-profit, nonprofit, and the variations on those, we find very, very quickly that we all speak in different terms when it comes to motivation and to currency. And sometimes breaking down those silos is completely necessary before we're able to break down the data silos that then lead us to a final proposition that AI can really build on as well. In the meantime, Finicity was growing and scaling. So originally Finicity was founded back in the year 2000. And at that time, Finicity was focused on envelope budgeting. This was personal finance management that allowed you to understand what was going on within your transactions. And it was actually one of the earliest apps. It was on the Palm Pilot, and it was a little icon with a piggy bank and additionally little envelopes that you would take your total income or inflow for that particular month, and you'd figure out what expenses you were going to prioritize. But eventually you were going to add every single expense into one of those envelopes, even if the final envelope was savings, was additional money that you could retain. And the goal obviously was to grow that final envelope and create financial health and stability for yourself, for your family, for your business, and other groups. So fast forward until about 6-7 years ago or so, and both in my career as well as the growth within Finicity and the open banking ecosystem, we really started realizing that these concepts of data lakes and these concepts of data being present in every use case that we wanted that there were many limitations to that. And you start hearing about the V's, the volume and the variety and the velocity of the data, or getting into the veracity of the data, or even the value of the data. And it's almost turned into V for vendetta at this point, with every V word somehow applying back to data. And part of what many of us realize is that without the correct integrations and without the right motivations and engagement for that data access to be present, you really couldn't handle a huge majority of the use cases in the world. And many big data use cases really shifted to a hyper-localized, hyper-personalized type space. And when we think about the financial world and something like credit, for example, has never been really focused on the past. And so even though the data that we may have access to is representative of the past, credit by its very nature is about the future. It's about taking a payment that I could be processing today in the present, let's say for an entire house, the entire amount of the mortgage, and spreading that out over, let's say, the next 30 years or the next 15 years, and turning it into a monthly payment that for now, I need to meet a minimum requirement of paying that monthly payment every single month, but going forward in the future. So as Finicity grew and expanded, it really started having to look at these relationships with data and integrations and data access, and it became an open banking and a data access layer for the financial industry, for the fintech industry, and for the industries that relate to them, tied back to financial institution data and financial institution use cases, and things that we call at a solution level that fit under the buckets of lending and decisioning or scoring, management, so your personal finance management, your accounting, other things along those lines, a profit and loss statement, and finally into payments and how you actually move that money back and forth, and what that looks like from a risk and from an acceptance perspective as well. So as Finicity realized this and really shifted this direction, we realized, we had over 10,000 integrations into financial institutions here in the United States. And we were able to create a layer that allowed fintechs to be able to build on top of us and create really, really amazing solutions. This really light cone of the present gave us a dimension and a plane that would say, if I can bring on behalf of a consumer a permissioned data set that allows them to be able to provide data from any bank or credit union or other financial institution that they've worked with in the past or are working with currently for a liability, a credit or a checking account, or other type of financial institution data source, then the consumer could then have access to a wide variety of fintech applications that then help them really expand on that financial experience. And we could start adding to this data access layer a data intelligence layer that could start taking advantage of each of these new data points that now the consumer had access to. This starts disrupting entire industries and the way that we think about finances overall. And many of the large financial institutions, as well as the really small ones, and many of these fintechs, whether new or older, are now able to really consider and customize and tailor or hyper-personalize an experience directly to the consumer and the individual. So when we think about this, it's a huge expansion, not only in innovation, but also in trust, and probably most importantly, in inclusion. So when we think about financial inclusion in one of these use cases, one example is Experian Boost. This is a use case that Finicity helps power. And really what we've done there is we've been able to say, traditional credit, there's this problem that we all kind of know about where we say, if I don't have credit, I can't get credit. And so traditionally, in order to get access to a loan, we need to be able to have a cosigner, or we need to be able to start with a very small prepaid card or other method to be able to start building trade lines and to build credit sources that allow others to be able to feel like our financial behavior and long-term personality will lead them to be able to trust us and trust the risk that is associated with providing us money that is out on credit and therefore in the future. So instead of just having credit in order to get credit, could we instead look at those financial behaviors and say these are indicative of something that will make me, as a financial institution or a creditor, decide that you are trustworthy, that your behaviors tell me or provide enough of a probability space that I can say, yes, you are going to pay me back, and you're going to pay me back on time. Or if you're going to vary when you pay, I know what to expect. And so I can look at that and I can assess that risk, and I can provide you the appropriate credit for that with rates and everything else. The second piece of this that we looked at is when we think about, again, the credit space and maybe that past-facing cone. When I open up a trade line, it's very difficult for certain credit providers, or maybe even we're not talking about credit, we're talking about something like my utilities or television providers or other sources of bills, and really non-discretionary expenditures. Or we can also think of these as commitments that I have made. If I can look at that information in a traditional method, it's really going to be the opening of that account. And then the reporting is probably, for the most part, only going to happen when I miss a payment. Because it's so difficult from a data access and a silo perspective to provide every single data point off to those who may be considering credit or scoring or a lending decision, to provide every single payment that this person has ever provided. If I have millions of customers, that silo becomes very, very difficult to get around. Well, the consumers through MasterCard and Finicity can permission access directly to their financial account, which then through AI and data science methodology, we can go through and we can actually identify each of those payments. And we can provide that information on those trade lines, and we can show the positive behaviors that then allow for the consumer to be able to get an increased score. And that increased score helps others be able to understand, yes, this person does pay their utilities on time. And based off of their other behaviors here, I can now understand that enough about this person and their situation currently that I can create enough of a probability space to assess the risk, which means that I can provide them with an access to a loan. And what we're seeing is not only people receiving dozens of points or even 100-point increase on their bureau reports, but we're also seeing individuals and even communities that have never had access to credit or traditionally have not been very likely to go get a mortgage, for example. Traditionally, they and their friends, their family and others have all rented, where now those individuals are able to experience something completely new in the financial world. And they're able to take that payment of today and extend that into the future. This is really shifting the way that finance works overall. And so as we consider breaking down each of these silos and looking across lend and manage and pay, we are creating opportunities for not only Finicity and MasterCard to innovate, but fintechs and individuals and consumers really around the world to start rethinking how their finances work, and to take the equation of a fiat currency that is really just a function of perceived value times the number of users, and it's a function of time, and that's your income or your revenue, and extend that out to the future, to create opportunities for you to make a decision today that you can start splitting up incrementally how you're going to pay that back and what that looks like going forward. It's an exciting opportunity, and as we see these silos come down, the opportunities are potentially endless. It's a whole new forefront, it's a revolution, and we're excited to have anyone and everyone involved and to see how AI can influence how we experience the world financially and how we can improve our own financial health. Thank you, and good luck.